Ladies and gentlemen, buckle up, buttercups. After years of speculation, SpaceX is finally a public company. Elon Musk's rocket juggernaut, the company that's redefined what's possible in space, is now the fifth largest company on the planet in just a few short weeks of trading. But let's cut through the noise, shall we? Valuations are sky high, expectations even higher. And if history teaches us anything, it's that going public is where the real test begins. I've been trading for decades. I own SpaceX in the secondary market at $122 a share, and friends and family shares pre-IPO at $135 a share. As of this first week in July, SpaceX is trading around $153 a share. I'm up nicely, but I'm not popping champagne bottles yet because I've seen this movie before. Look at the cautionary tales. Take Rivian. They went public in 2021 with massive hype. Electric trucks, Amazon backing, the works. Valuation over $100 billion at the peak. Today, about $20 billion, 20% of its peak. They're diluting shareholders just this week to stay afloat, announcing a 75 million share sale. The stock is getting crushed. Why? Because execution realities hit, production delays, cash burn, and a market that finally demanded profits instead of promises. Lucid, same story. Hyped as a luxury EV savior. Massive valuations pre-IPO. Post-IPO, repeated dilutions, missed targets, and a stock that's struggling just to survive, to live up to the Saudi-backed dream. Great technology, brutal capital requirements. Even some successes started to get rocky. And remember Google. Remember Google? Remember the IPO for Google, now Alphabet? Their 2004 IPO was messy, to say the least. The Dutch auction format confused people. The stock actually broke initially. In other words, it came out at a price and it broke that price on the first trading day in Google. But over time, compounded massively because the underlying business delivered real innovation and real revenue growth. The lesson, great companies survive the IPO volatility. Hype-driven ones often don't. SpaceX isn't exactly like any of these, and that's the point. This isn't another EV story chasing subsidies. SpaceX is launching satellites. Starlink is connecting the unconnected, and they're the only private company routinely putting humans and cargo into orbit. Starship could change everything, and SpaceX is attempting a brilliant business idea. Build satellites like baking cookies. Mass-produce satellites so every company on the planet could afford their own closed-end system, internet loop. No intellectual property or outside hacking risks. That's real, tangible progress, not just slick-talking stockbrokers who, by the way, are stockbrokers because they aren't smart enough to be traders. And not about all flashy PowerPoint decks. Currently, SpaceX is trading at a $2 trillion valuation. $2 trillion with a T. Fifth largest company in the world. A couple of weeks of trading. Starlink alone is a potential monster, but scaling globally, navigating regulation, and competing with government-backed players won't be easy. Adding the intense capital required of reusable rockets and interplanetary ambitions, this company burns cash, but this company is burning cash and making history at the same time. Expectations, granted, enormous. Wall Street will demand a clear path to sustainable profits beyond the launch cadence. Musk's track record with Tesla shows he can deliver long-term, but the ride is volatile. Musk IPO'd Tesla at $17 a share. Today, it's $407. But with splits, today that $17 share is worth $6,100. Elon Musk knows what he's doing. Short-term pops on hype, followed by reality checks when guidance comes in. That's the norm with these very, very intense IPOs. Compare that to a true long-term winner like Google. Early investors who held through the noise got generational wealth. The ones chasing the IPO pop, mixed bag. SpaceX has the same potential because it's solving hard problems in a way governments can't match, certainly not efficiently. Private innovation, beating bureaucracy. Full disclosure, I own SpaceX. I'm long SpaceX. I bought secondary stock at $122 a share. I bought friends and family shares at $135 a share. I'm sitting on a nice paper gain at $153 a share, but I trade for a living. I know valuations. I know they can expand or contract fast. This isn't financial advice. It's a reality check. Do your own due diligence. Space is hard. Execution is everything. But the bottom line, SpaceX going public could be a watershed moment for private space. Proof that bold vision and American ingenuity still win. But don't get caught up in the hype. Study the business like a trader. Look past the headlines to the cash flows, the moat, and the long-term gain. Freedom to innovate without constant government interference is what built companies like Tesla and SpaceX. Let's hope the public markets reward that instead of punishing it with short-term noise. Like I said, I own SpaceX. I could have had more stock at those lower levels, but I chose to save my buying power for the opportunity to buy a dip below $100 a share. That opportunity, I believe, will be there. I think I'll be able to buy that stock, scaling down at $100 a share down, if it gets there. And instead of panicking because I loaded up at the stock at higher prices in the hype phase, I'll be buying stock when it gets down there. And guess who I'll be buying from? All those hyped up buyers will surely be panicking below $100 a share. Remember my trading motto: trade with your head, not over it. This is Eric Bolling. Stay sharp, stay free, and I'll see you on the edge.